In this video, we will continue with Chapter 8 on page 233. We are going to skip to the second beige box, which has the objective of to record invoices from the sale of boats on account. So number one, click the Create Invoice from the Customers section on the home page. We're going to select Fantasy Sports. We're going to click the Items tab. We're going to select All button to select both boats received from Malibu and then click OK. We're going to have 3/6/13 as the invoice date. We're going to type 10004 as the invoice number and then click the Apply Credits button and then click Yes to save the invoice and then be done with that. Then we'll go to number 9. So let's do all that together. We will go back to the software. We are on the home page. I have my open windows over here. If you don't have the open windows open, you can hit the home tab and make sure that that is checked off and you'll see your open windows. If your home page isn't open, you can hit this little home, which is home, and that will open the home page. Alright, so number 1 said click Create from the Customer section of the home page. So create invoice. So I'm going to click on the invoice down here, creating an invoice. We will then type in the name, Fantasy. Once we start typing it in, it should autofill. So I'm going to hit Tab once that starts to autofill because that's the quickest way to do that. And click the Items tab. So this pops up here saying that there is something related to this invoice, meaning in this case there's a PO related to it. Now when it pops up, it's on the Time tab, and that would be if we entered time for the invoice for our employees. So we need to go all the way over to the Items tab, and remember items represent the inventory items. So in this case we sent out a PO, a purchase order, to Malibu for the specific purchase of these boats for this client, Fantasy Sports. That is not always the case, but in this item it is the case because what we do is we are the middle person. We buy the boats, we get a deposit, and then we buy the boats for a specific client, and this is the specific client. So number 4 said click the Select All. So we could say Select All, meaning it's going to select these 2 items here and then hit OK. So click OK, and there we have that. So number 5 then says type the date of 3/6. So I'm going to go back up here to the date, type in 03/06/13. That's probably the fastest way to do that. I'm going to hit Tab, and it goes to the invoice. Now normally we would never change the invoice, but because this problem is going out of order a bit in order to line certain things up, the invoices are not going in order. So we need to make this invoice number 10004, and then I'm going to tab through this, and then it says number 7 says apply credits. What that means is that QuickBooks is using the term credit in terms of an overpayment, which is different basically than the way we've learned about debits and credits, meaning the credit just means the amount on the left hand side of the T account. So a credit, the way the book is using it in this context, is the way that most people think about it, and that is that there's basically an overpayment for this client, meaning that they put a deposit down on these 2 boats, and then we purchased the boats, so now we're going to apply, of course, that deposit to this payment. So they now have 113. We're going to have to apply, I'm going to apply sales tax to that as well. So we're going to have state tax. So now it's at 120,345, and then we need to apply the credit. So we're going to go up here to this Apply Credit button, click on that. The changes to this transactions must be recorded before we continue. Do you want to? Yes. I'm going to say yes. And this window is trying to do that spell check again, so I'm going to say add to that, add to that. Okay, you have changed the Fantasy Sports tax item. Would you like to have this new information appear next time? Yes, we would. Okay, and then we finally have this credit screen. So here's the credit screen that will apply the 28,250. I'm going to say done. It's already checked off, so we'll just say done. The credit will appear down here. So here's the amount of the bill. Here's what they already paid us. Here's what they still owe us. Number 9 then says select the terms in net 15. So the terms are here. This just means that they're supposed to pay us within 15 days. If they do not, then they're late. and we stick the collection agency on them. And this date, I'm sorry, I have this date off. This date should be 03/06/13. There we go. Okay, and that would mean, like number 9 says, that it would be due in 15 here. Okay. 6 as the ship date, so the ship date is correct. And then we can hit save and new. So we're going to make it look like this basically, and then select save and new. Of course, we could double check that by taking a look at the book here. They say on the next page we should basically look like this, even though you can't see it too well. But the bottom line number here is 92.96. Is that right? Alright, we are off by $1, but I'm going to call that rounding, and we're going to hit save and new. And there are payments applied to the same invoice. Changing the amount will cause the payments to be applied differently. Do you want to change it anyway? Yes. So we're going to hit yes. You have changed it, so okay. Would you like to have this new information appear next time? Yes. Alright. Now, just so we can get an idea of this, I'm going to pull up the trial balance. Okay, and there's our trial balance, and we basically just issued an invoice. So that means we selected the AR here. So to back up this number, we could look at the subsidiary ledger, which is the customers and receivables here. And if we look at the customer balance detail, as of, we can see Fantasy Sports. Here's the deposit they put in. Here's the invoice, and here's the balance that they still owe us. We expect to see that check in the mail at some point. All right, back to the book. Make this a little smaller. Going back to the next section, we are now on number 11. So it says, click yes if save changes. We've done that. Now we're on number 12. It says select Freebirds from the customer job list. Type 323 as the invoice date. Type 10007 as the invoice number. Select the terms, net 15, and the terms list. Type 323 as the ship date. Okay, and then hit save and new. So we're going to do the same thing with Freebirds. So I'm going to go back to QuickBooks here. We are now in another invoice. I'm going to type in here Freebirds. Once again, it'll pop up automatically. We're not going to the job. We're going to the actual client. I'm going to hit tab. And then number 13 says that we want to type 323 in the date. So I'm going to type 03/23/13 there. The invoice should be 10007. Once again, we shouldn't have to do that, but we're going to. And then because it should pop up automatically, but we're going to go a little out of order because of the way the book set this up. And then the terms will be net 15 like so, and type 323 as the ship date. So 323 is the ship date, so that looks good. Number 15 then says type the bill to quantity and item code information as found in figure 816. So figure 816 is on the next page. It's right here, so if we make it a little bit larger. In this case, we did not collect the security deposit, so we have to put this information in there manually, which we will put in at this time. So we're going to go down here, we're going to put the quantity, and the quantity is 2 tab. We bought an MSLSV, which is a Malibu Sunscape, 65,000 right there, so that looks good. We will need sales tax on it, so that is on there, and our total number at this time is 138,450. So we have the 138,450 looks correct. So then number 17, then we can hit save and new. So we're going to hit save and new. And yes. Now if we look at our customer balance summary again, two things will happen here. The trial balance, the accounts receivable went up, and of course our revenue went up, along with the taxes that we owe went up for sales tax as well, the sales tax payable. And if we look at the customer balance detail for Freebirds, we have the invoice here. Okay, so now we're going to move to the next item. Click yes, and then select Florida Sports Camp from the customer job list. Number 19 says type 330 as the invoice date, type 10008 as the invoice number, select the term net 15 from the terms list, and type 33013 as the ship date. Enter one item code T22V and state sales tax, save and close. Alright, so we're going to do one more of these. I'm going to go back to the invoice over here, my open items window, and we now want to select Florida Sports Camp. So now we're on Florida Sports Camp. These are another client, of course. The date will then be the 30th, like so. The invoice is correct this time. That's nice. The terms will be net 15. So we're going to go to net 15, like so. And 330 is the ship date. Number 22 says we want a quantity being 1, and this is a T22V. So that's our high quality boat right there. That's our $78,000 boat. And if we include sales tax on that, of course, it comes out to $83,868. Okay. Another thing just to point out here before we post this is that, of course, that's the sales price. When we post this, what's going to happen? Accounts receivable is going to go up with a debit. We're going to credit sales. What's not on here is the cost of goods sold. The cost of goods sold means how much we paid for the boat. And if you wanted to know what that is, remember we put those in. If we look at our item lists over here and we look for that T22V right there. So the cost of the boat is actually $63,000. Of course, that number is not on the invoice because we're not going to put that on the invoice that we give to the client. But when we record this, it will also debit cost of goods sold and credit the cost of the boat, reducing inventory and increasing cost of goods sold. So then it tells us that we can hit save and close at this time, number 23, and hit yes. Back to the book. We are now on page 235. So we're going to go to page 235 where we have a new beige box and a new objective. Of course, you can go through and read through the scenario. We're just going to skip to the actual activities which are in the beige boxes. So this one says to record receipt of deposit from performance rentals. So click receive payment from customer section on the home page, select performance rentals, type 1,000 as the amount, type 331.13 as the date, check is the method, that's the check number here. Click unapply payment button since this is a deposit on another transaction and not a payment on the invoice 1006. Okay, so then we're going to hit save and close and click record deposit. So this is an important point to point out. When we hit the receive payments, what will happen, you will see, is that it will try to post this payment to the invoice that is out for performance rentals for a boat. But this deposit is for a new boat. So this is a boat that we're going to purchase later. Therefore, the invoice has not been made on this particular boat. So we are not going to apply the deposit. What we're going to do is create a credit basically to this account, meaning the credit in terms of this account will have a an overpayment that we'll have to apply to some invoice in the future rather than an invoice in the past. So let's see if that makes sense when we take a look at it. We will go to the home page we are now going to go to the second button in the customers section, which would be to receive a payment. So we're going to click on receive payment, and we received this payment. Number 2 says from performance rentals, so I'm going to type that in there. All right. Then select performance rentals from the receiving drop-down list. Number 3 says type 1,000. Then I'm going to hit tab, so that's how much we got. Notice once I hit tab, it then checked this number off because it's trying to apply that 1,000 to this invoice. But that 1,000 isn't part of this invoice, it's a deposit, so I'm going to uncheck that like so. Then we want the date to be the 31st. Tab. It's a check, and the check number is 15687. Number 5 says click the unapply button. Okay, so we did that since deposit. And then number 6 says save and close. So then we'll hit save and close. Okay, and then this thing pops up saying, hey, you know what, this payment doesn't apply to any invoice. And that's okay. We know that because it's a deposit, so we're going to say that's okay. And then, of course, if we look at our customer balance detail for performance rentals, we have down here the $1,000 payment. So we've got performance rentals, the job, and then all other performance rentals. So here's the $1,000, and again, it's a credit not applied to anything else, and we could see it there. It's going to be a decrease on our accounts receivable, even though that's not exactly correct. It should actually be a liability, but we're going to put it into the receivable, reducing the receivable, because that will be easier for us to then apply it to an invoice in the future. So we'll talk more about that at a later time. And now we will go to click the record deposit, select 331, and then click OK to record the deposit of the 10,000. So I'm going to go back to the book, and I think that I only recorded it for 1,000, so I made an error there, and so I'm going to go back here. Now, if there's an error and we go back and find it, I'm going to say that deposit was wrong. Let's go back to what we did to do that. We went to the home page. We went to receive payments, so we could go into there. I could go to receive payments, and then I want to find the prior payment. So I'm going to hit the back arrow, and there's the payment. I'm going to go in here and I'm going to add a 0 in there. I'm going to add a 0 to make it 10,000 instead of 1,000, and then I'm going to hit save and close. So we have now adjusted that one. So if there's an error in a 0 or something like that, you could do that. That is one of the things that is different than in QuickBooks than in some other software where it would not allow you to do that. We would have to basically void that and re-enter it, which is better for an audit trail actually. Okay, so then we can go to record payments, record deposits. So we'll go here, and just to point out one other thing, when we put it into the 10,000, we put it into undeposited funds, and that's because unlike in our theory classes, we just had something called cash. In, of course, this experience, the checking account is our cash account, but it's a checking account. So if we have a check and it's not in our checking account yet, meaning we didn't go to the bank, QuickBooks is going to put it into this undeposited funds first, then we'll group all our checks together and then go to the bank. So if we got more than one check, we would go to the bank and it would show up on our bank statement as one lump sum of all the checks, and that's how we would have to check it off when we do our bank reconciliation. Therefore, we have to do this one extra step that we didn't do in the theory classes, meaning that when we receive payment, we don't debit cash per se, we debit undeposited funds, which is a form of cash, and credit accounts receivable, reducing the amount that the customers owe us. Then now we're going to debit the checking account, increase in the checking account, and credit undeposited funds. This is an area that many companies make errors on. If they have amounts in undeposited funds, it's probably because they messed up somewhere. So we're going to go back over here to the Home tab. We're going to record deposits, and we're going to check off this deposit here, the 10,000, and say OK. There's the deposit, and we want to record it as of the 31st, which is OK. That's what we have. So we're going to say save and close. All right, back to the book, going down to the next beige box, which has a new objective of to choose which bills to pay and pay those bills. Number 1, click Pay Bills from the vendor section of the home page. Click the option button to show all bills. Click the check box next to the due date for 5/13. Click the options button to assign check number. Type 32013 in as the payment date. Your screen should look like figure 817. Okay, let's do that. Home page. Number 1 says click Pay Bills. So we're going to select Pay Bills, and that means that we had already entered the bills. So just to point this out, if we were going to pay bills in the company, we would first enter all the bills, and we may put them all in entering bills, not just write checks. It might be easier in some cases to actually put them into the bills section and then pay them all at one time. If we were to pay them all at one time, then we can put the checks into the, if we had external checks, we would put them into the printer, and they would already have the check numbers on them, and then we would just print all the checks at one time in this fashion. Obviously, in this case, we don't have checks, and we're not going to print them. We could also assign check numbers, and you could do that at home as well. You could assign the check numbers, have the checkbook separate outside of the system, and then just tell the system what check number you are using when you handwrite the check, and you could still use it in that fashion. So we're going to go to Pay Bills, meaning we must have already entered the bills. Here's the bills that we already entered, and number 2 says click the option button to show all bills, so that's already selected. And number 3 says click the checkbox next to the due date 4/5/15. So that's going to be the first one here. So that's the one we're going to pay to Malibu. And then click the option button to assign check numbers. So it's already selected here. Again, if we were in a company that printed their checks and they would buy checks that would probably be the same size as a piece of normal paper, 8 by 11 or so, and they would just put those in the printer and print the checks here. We of course aren't going to do that. We're going to assign the check numbers, and then type 32013 as the payment date. So the payment date is right here. We're going to type 03/2013 tab as the payment date. Then we're going to turn to page 236 like so. Click. And number 6 says click Pay Selected Bills. Type 1030 as the check number in the assigned check numbers window, and then click OK. Number 8 says click Done in the payment summary window. Okay, so then number 6 says Pay Selected Bills, so we're going to do that. And then it says type 1032, so this is starting with check number 1032, and we're going to hit OK. That is it. So we're going to say done. We're not going to pay more bills. We're going to say that we're done paying bills. We just paid a $90,000 bill. I'm done for now. And going to the next item. On page 236, we have a new beige box with a new objective of to record cash collections on account and related deposits. Number 1, click Receive Payments from the Customer section of the home page. Number 2, select Orlando Water Sports as the customer received from. Number 3, type 5300 as the amount received. Number 4, type 32013 as the date received. Type 9152 as the check number. All right, let's start doing that. So number 1, click the Receive Payment. So we're in the home page once again, and of course we already have the invoice at this time. Now we're going to receive payments. In this case, we're receiving payments on the invoice rather than a deposit. So this is kind of the normal flow of the process. Normally what would happen, of course, is we would have the invoice first, then we'd get a check in the mail, then we'd run to the bank and deposit it, hence the arrows going this way. This problem's a little different in that many times we have the deposit, then the invoice, we have the receive payment, which is the deposit, then the invoice, then we have the other payment, that's the rest of the bill in the mail, and then we go to the bank again. So in this case, this is more the normal flow. We're going to hit the receive payments here, and we're going to type in Orlando Water Sports and type 5300 as the amount, 5300, the date being 3/20, the check number being 9152. And there we have it. So notice it automatically applied it because QuickBooks is going to try to say, hey, you know what? If we got paid by a customer, it must be related to something. It must be related to this invoice that we have here. So it's applying that to the invoice. Remember, what will then happen is accounts receivable will go down with a credit, and we're not going to debit cash per se, or not the checking account, let's say. We're going to debit undeposited funds. Then we're going to have to run to the bank and deposit that. So we're going to hit save and new at this time because that's what it will tell us to do on the next page, that page being 237, number 6, save and new, just like I predicted. Number 7, select Buena Vista Water Sports as the customer received from. Then we're going to type 1964.93 as the amount received. And then number 9 says type 327.13 as the date received. Number 10 says type 741 as the check number. Then we're going to save and close. Then we're going to click record deposits to deposit that information. We're going to deposit both of those checks at the same time with the date of 3/27. Then we're going to close the deposit window. Let's do that. So number 7, we're going to type in Buena Vista. Buena Vista. That's a nice view. And we're going to type in the amount of 1964.93. And then number 9 says the date is 03/27/13. And we have a check, and we have the check number being 741. And number 10 says then we can hit save and close. And of course, once again, it applied that payment to this particular invoice, saying that was the outstanding amount, that's what was paid. Now we are paid up, and if we hit save and close, we can now deposit it. If we wanted to check that payment and see if we applied it out correctly, we can look for Buena Vista here in our customer balance detail, which is a kind of a subsidiary ledger to the accounts receivable on the balance sheet. Here's Buena Vista right here. They owed us this amount from this invoice. Now they paid us that amount from that invoice, and therefore owe us no more. So let's go back to the home page. We're going to go to the record deposit section now. So now, of course, we're running the bank with our money. We're going to check both of those items off as indicated on number 13, and we're going to hit OK. And then the date is 3/27/13, so that is correct. And we can hit save and close. So once again, of course, the amount that will be on our bank statement will be this amount, 7264, not these two individual deposits. It'll be in one lump sum. That will become important when we try to reconcile our bank account, because it will be handy for us to see this, which will be the same amount on the bank statement, so that we can check it off and say that we have received that money. Okay, save and close. Turning the page now to the next page, being page 238, where we have a new beige box and a new objective of to transfer funds and pay sales tax and payroll tax obligations. Number 1, click the chart of accounts icon in the company section of the home page. Double click the short investment account. Type 3/30/13 as the due date. Type Bank of Florida as the payee. Type 40,000 as the payment. That's not 4,000, that's 40,000. They would like a comma there, would be nice. Select the Bank of Florida as the account. Click record and then close the short-term investment chart of accounts. Okay. Then we're going to pay the sales tax. So let me give you kind of a recap of what we're doing. I'm just predicting you should read the scenario to get a better prediction, but notice that we have the sales tax information here, that's the amount that we owe. This is a liability on the trial balance for the sales tax that we owe for the boats that we have been selling. It's been recording due to or by the invoices that we record. So every time we record an invoice, the sales tax down here is an amount that we have to pay to Florida, our silent partner. So now we're going to pay that out, but we don't have enough money in the bank. So therefore, we're going to put some of this money that is in our short-term investments, our stocks and bonds investments, into our Bank of Florida checking account. Therefore, we can then pay off the sales tax. That is the plan as I see it. So now we could do this with a journal entry, but of course QuickBooks is trying to do everything without journal entries. So we're going to do this with basically ledgers. So we're going to do this with a ledger. Most people probably would do it. I would do it by going to the checking account ledger and recording basically a deposit. They're going to do it by using the other ledger. So let's do it the books way. So we're going to click the chart of accounts icon on the company section. So if we go to the home page and we go to the company section here, we go to the chart of accounts. You can also go to the chart of accounts by going to lists, chart of accounts being the main list of the company. Number 2 says double click the short-term investments. So if we double click on this, if I double click on any of these, we'll see it's not just a bank account, we'll see something that looks kind of like a ledger, like a checking account item. And we can do that for any of the accounts. And so QuickBooks is trying to allow us a way to say this account is going up and down rather than this account is being debited or credited. So I'm going to double click on this account. And now this is the investment account. So I'm going to say that this account is going down. So we're going to say on 330 tab, I don't need really anything here. I'm just going to delete that. We're going to pay it to the Bank of Florida, which is our checking account, and we're going to have it in the payment or the decrease area in the investment account. So the investment account is going down by 40,000. That's 40,000. And then number 6 says it's going to the Bank of Florida. Bank of Florida. Okay, now it doesn't record it unless you hit enter or record here. I'm just going to hit enter, and then I'll know it's recorded because it'll make a noise, and it'll also have a balance over here. So there's the noise and there's the balance. Okay, and then we can do number 8. So if we go back over here and we look at number 8, it says click the sales tax icon from the vendor section of the home page. Click the sales pay sales tax and then type 330 as the check date. Type 2/28/13 as the show sales tax due date. Press the tab key, type 1033 as starting the check, and then click in the pay column next to the state tax. Your screen should look like the one on 8/19. Okay, so let's do that. Now, of course, again, the objective, of course, is that we're trying to pay the sales tax here, but QuickBooks has their special way of doing that, because what really ends up happening is it's the end of March, and it looks like this company is paying sales tax monthly, meaning the sales tax was generated up through February, and we owe February sales tax to the state by the end of March. So it looks like we're paying off, we have a month to pay off the prior month sales tax to the government. And that will change from state to state. It could be quarterly, it could depend on how much revenue we have. But now we could do that by writing a check, but we're going to go and use their system in order to do this, which should track the sales tax for us. So click the sales tax icon from the vendor section. So the vendor section being here, we're going to go to the manage sales tax icon here. Alright, number 9 says click pay sales tax and then type 330. So we're going to select pay sales tax, which is this button right here, pay sales tax, and then select 033013 as the check date. Check date, and then show sales tax through 02/28/13. So make sure you have that, because that'll make a significant difference in the sales tax being paid, because we're paying the sales tax that was generated for the month of February. We of course are paying it at the end of March. So we have a month to pay the prior month's sales tax. And we now look like the picture, and we have 21,904.04 as the amount. So I'm going to hit OK and turn to the next page. So now we are on page 239, and I already hit OK, so I did that a little quick. And then number 15 says click the Pay Liabilities icons from the Employees section of the home page. So now we're going to do the same thing with the liabilities. So we're going to, then number 16 says type 1113 as the from date, type the 2/28/13 as the through date, and then click OK. Uncheck to be printed checkbox. Select all the payroll items. Select the review liability check to enter expenses penalties. Options, type 3/31 as the check date. Your screen should look like the one here. Okay, so let's take a look at that. I'm going to close this up now. And if we look at the trial balance now, of course, in the payroll, we also have payroll taxes. That's the taxes that we took from the employees. It accounts for Social Security, Medicare, and federal income tax. And it also accounts for our portion of Social Security and Medicare. If we take a look at that, drilling down on it, it of course is generated from the payroll. Here's our employees. If we take a look at this, these are their checks. And if we take a look at the detail, here's the check, here's the payroll amounts. So that's what is generating this amount. Often one of the most confusing items, payroll. And once again, we could just write them a check, right? I mean, basically that's what we're doing. We're writing a check, but we're going to use the payroll tax system in order to do that correctly. And again, our goal is to pay the payroll taxes in whatever the required amount is to the government in a timely fashion. So that generally depends on how much payroll we have as to whether we have to pay it weekly, bi-weekly, monthly, quarterly. But we're going to take the payroll taxes and we're going to have to pay it in some kind of systematic way, and it's useful to use QuickBooks system to do that. So we will then go here. We're going to go back to the home page, and number 15 says click the Pay Liabilities icon from the Employees section. So Pay Liabilities. Number 16 says we want the from date to be 01/01/13, so we're paying the quarter, it looks like, and then no, only the first 2 months, to 02/28/13. So we're paying for the first 2 months, and then hit OK, and then uncheck. Number 18 says uncheck the to be printed checks box. So we're not going to actually print these checks once again, because that would mean that we would have the checks all in hand and we would put them into the printer, and we're not going to do that. So number 19 says select all. We're gonna select all. Just there should be one button to do that. Select all. No, maybe not. So I'm just going to check them all off, selecting them all, like so. And then number 20 says select the review liabilities check to enter expense penalties option. Okay, that is up here and it's already selected. So number 21, type the check date. This is important. Make sure you change this to 03/31/13. And there we have that. And now we should look like the picture on page 239. I think mine totally looks like the picture. The amount being 6792.64. Okay, I think we're good. And then it says click create. That's the blue button. So we will then create. And there we have it. Now we have a couple checks, of course. One going for unemployment. That goes to the Fed. That's what we paid on our side. If we take a look at the next one, we have another one going to the Fed for unemployment, withholding, federal income tax withholding, and Medicare. And there we have it. So I'm going to close this up. Now, of course, we may have state taxes as well, but we're not going to deal with the state tax. State of Florida, I'm not sure exactly what their tax system is. So in California, we would have state taxes. Okay, number 24. Click the next arrow. We have done that, and then close the checks. We have done that. So let's turn to the next page, which happens to be page 240. And we had these two items, which of course I'm hoping that our checks looked like those. And I'm going to go to the next page now, which is page 241. And now we have to record end of month expenses. So now we're going to just write the normal checks that we would at the end of the month, just as we would probably for the household here. Number one, click the Write Checks icon on the banking section of the home page. Type 1036 as check number. If it is not already there, type 33113 as the check date. Select Central Florida Gas and Electric as the pay order. Type 1050 as the amount. And then we're going to do the same for the utilities. Or then the utilities will be the account. Then we'll hit Save and New. We'll do it again. Type 1037 as the check number, the date as the 31st. Then we're going to pay the phone bill, which is $1,500 telephone expense. Okay, let's do that. Now, if you do this on your own and you wanted to put your personal checking account in there, I just want to point out that if you're not having QuickBooks print the checks out, you could go to Banking, use Register, and the register it'll default to is your checking account. And you could just enter that information in here, you know, your date, check number, who you're paying to, payment, and then you have to have the account here. We're going to do the same thing using the icons. So I would if you're just entering the checks and you're handwriting them, I would do it that way. I would use the register. Or, of course, we can do the same thing. We could say write checks like this. Click the Write Checks icon on the banking section of the home page. Oops. I went to check register. Write checks. There we go. Okay, and then we're in Bank of Florida, of course the area. 1036 should pop up automatically. And the number and then the date is 3/31. That's correct because it's the end of the month that we were paying these checks. And we're going to type Central Florida Gas and Electric. Hit Tab. Type 1050 as the amount. And then, of course, the one thing that is different, we could have a memo, of course, but of course the gas and electric is pretty self-explanatory. So then the checking account, the account it's going to go to is utilities, generally. Again, there's no hard, fast rule that it has to go to utilities. You may have an account called gas and electric, or and break it out from other any other utilities. Gas and electric generally are the two utilities other than the phone company, which we will break out, but that is an option to the bookkeeper. Notice that we're in the expenses tab, not the items tab. If we were paying for inventory, it would be in the items tab. So keep those two tabs in mind, because if it's over here it can be confusing. Okay, and then we're going to hit Save and New. And number 8 says we're going to type, that is the correct number as of the same date. Number 10 says we're going to pay Verizon, which of course should pop up automatically because we have paid Verizon before in the past. So then we can just hit Tab, typing 1500 as the amount. And then of course the expense account will be telephone expense, Tab. There we have it, and number 13 says that we can now save and close this, so that is what we will do. Saving and closing. Going to the next section here, scrolling down to the next beige box, which has a new objective of to record end of month payroll. Click the Pay Employees icon on the Employees section of the home page. Type 3/31/13 as the check date and 3/31/13 as the pay period end dates. Click Yes when asked if you want to update the hours worked from the new pay period. Then place a check next to Donna, Karen, and Ryder's names. Your screen should look like figure 823. There's figure 823. Notice we didn't check Pat. I'm not sure what happened to Pat, but they are not going to get paid at this time. So number 1, we're going to click the Pay Employees. So I'm on the home page once again. And we're going to go to the Pay Employees. Then number 2 says, make sure you change both of these dates to 03/31/13 and 03/31/13. Now, of course, this is the pay period end, and this is the check date. These are not always the same date. Oftentimes, they will not be the same date because it takes a while to process payroll in order to pay it. So those dates could very well be different. And it's a common error doing these problems to have these dates different and write the check in today's date because we didn't change both the dates. So be careful on that. Make sure you change both of those items. And then we want to check off Donna, Karen, and Ryder, leaving poor Pat not being paid this time around. Okay, and now we look like the picture on page 242, or at least mine does. Mine's totally like the picture here, I believe. And then number 3 says, use the information below to create payroll for Donna, Karen, and Ryder. Click each employee name to provide the tax information. Click continue. Okay, so if we click on the names, then we can enter this information. Now, of course, we're doing the manual payroll account, so we would have to manually enter the withholdings. This is crazy even for 3 people, especially at least if they had state taxes. Most people would not use this method to process payroll. They would at least pay for the method that would allow for the federal taxes to at least be calculated. But it is good practice to do this for a problem like this, and the payroll would look the same, but there's basically 3 types of payroll that you can purchase in QuickBooks. And of course, you can also get payroll externally from like ADP or Paychecks. So those are very interesting and kind of big questions for a company to look at, both large and small. So if I click on Donna, this icon shows up. Donna, I'm now going to look at the book here, and it just lists it vertically. So here's the earnings, that's the gross pay. Here's what was taken out. That's going to be the net check. And these amounts are the amounts that we have to match. So of course we have to match Social Security, we have to match Medicare and whatnot, and so on and so forth. So she's a salaried employee. Her gross pay is going to be $4,166.67. Then I'm going to go down here and we're going to take away from her. Now of course we're taking it, but it's not our fault. The federal government makes us do it. So we're going to take $463 for federal income tax withholding. That we don't really know where that came from because it depends on the dependents that she has, and that's going to be filled out on the W-4. The Social Security we should kind of know because currently it's at 4166.67 times 0.062, I think. So that's 258.33. So they are correct. They're current on that. The book is fairly current, which is 258.33. So notice that this tax is a flat tax, more of a flat tax, meaning we don't have different rates, very easy to calculate. This tax, not easy to calculate. It's kind of a pain. Okay, and then this one is 4166.67 times 0.0145. Flat rate, $60. So it looks like they're current on that. That's what the book says. So 60.42, rounded. And then of course we have to match on our side. We match the Social Security of 258.33. We match the Medicare of 60.42. And then we have to pay on top of that for federal unemployment. This is coming out of the employer's pocket, which I think that's us. I'm thinking of ourselves as the employer. And we have the 33.33, and then we have to pay the Florida unemployment tax, 112.5. All right, and then it says that the net check, it says in the book that the net check is 338492. So that's what we have here, 338492. So I'm going to hit save and next. And we then have Karen. So here's Karen, and all I'm going to do is go through this again. So there's Karen's the other partner, I believe. So they have the same salary. Their withholdings, the federal withholdings are different. And notice that's interesting because they have the same salary. That's because the withholdings depends on dependents and tax rates and what you put on the W-4. So this is just an estimate, and it will wash out when we do the 1040 at the end of the year. These, on the other hand, are straight up the same because they have the same income, and these are flat taxes. These are easy to calculate. And then, of course, our withholdings are going to be the same. So let's go back here and put in Karen's information. Karen paid $710, and that this being much larger number of the withholding could be many different reasons. It could be that Donna is single and doesn't have dependents, and Karen, or I'm saying Karen is single and Donna is not, and therefore pays more taxes. Or it could be that Karen's spouse, has a lot of income and therefore pushing Karen into a higher tax bracket. So we really don't know what that is, but we do know that Social Security is the same, $258.33. It doesn't matter about those other circumstances, and Medicare is the same. So that is interesting when we think about tax law, right? And then we're going to go down here and we're going to say we're going to match it at 258.33, and then we're going to take about Medicare tax is 60.42. We're matching that, and then the federal unemployment 33.33, and the state 112.5. Okay, so then we're going to hit save and next again, and now we have Rider. And of course, Rider has these different pay period options up there because we used the billing section for Rider because he's our hourly employee, and we used him to bill these individuals. So if we add all these up, $15 an hour times this amount of hours, it comes out to 600 down here. And then if we scroll down, or we're at the bottom, we're going to start entering our withholdings down here. So once again, we're looking, if we look at the book, we're over here on Rider, 600 gross, that'll be the net. Here's what came out of Rider's check. So we're going to go down here and start with withholdings. So Rider had withholdings of $82.20. Social Security, once again for Rider, you would think would be 600 times 0.062, and that's what they have, so that's correct. Book's right, the book's right. 37.2, and then Medicare, you would think, would be 600 times 0.0145, 870. That is correct, 8.7. And that gives us the net check of $471.90. That's correct. And then we pay on our end, we have to match the Social Security of 37.2. We have to match the Medicare 870. Then we have to pay on top of that $480 for federal unemployment and $1620 for state unemployment. Then I'm going to hit save and close. And now I'm going to continue this process and process these checks. So I'm going to hit continue. Now I could have hit continue before and then clicked on all these guys and then process them rather than do it the way we have it, but so I could click on these again and see the same information. Okay. So then create paychecks. So I'm going to go ahead and create the paychecks. Okay. And then it clicks all like that, and it created 3 paychecks like that. And we're not going to print the paycheck, so I'm just going to close that. And if I look on my banking and use register, then I can see these 3 paychecks here for Donna, Karen, and Ryder that was generated. If I double click on them, there's the information, there's the detail. So those are those. And let's go to the last piece here of the book, turning to page 243, where we have a new objective of to record the purchase of equipment with long-term debt. All right, we're going to purchase equipment basically on account, or we're going to take out a loan for the equipment or something. So click on the chart of accounts, double click furniture and equipment, type 33113 as the date, type staples, type 500 as the amount in the increase column, and then select loans payable and click record. So let me kind of break this down real quick. If we're looking at our trial balance, we're going to buy furniture and equipment, meaning we're going to buy this thing's going to go up because we're going to debit that, and this is a debit balance account. In order to make it go up, we do the same thing to it, which in this case would be another debit. Now you would think we would pay for it with cash, but in this case we will not pay for it with cash. If we were going to, we would just write a check and that would credit cash and debit this amount. What we're going to do is finance it, and therefore the other side is going to go to a loan or something like that. So in order to record this, we could do a journal entry, but again, QuickBooks is trying to do it in such a way that we don't need a journal entry. So what we do know is that the furniture account is going up, and then we're going to have to hit some other account. If we think about it like that, we don't have to think about the fact that this is going up with a debit and the other account happens to be a liability, which is going to go up with a credit. So let's see if this makes sense. You can comment on whether this is easier or harder than a journal entry, but we'll do it the way the book says here. So it says click the chart of accounts. So I'm going to go through it this way. I'm going to hit lists at the top, go to chart of accounts. So remember, any of these lists I can just double click on and it'll basically give me a register type of thing, and it will say things in terms of increase and decrease rather than debits and credits. So the easiest account they're thinking is to think of is this furniture. Now remember that every transaction we have has at least 2 accounts. So it's easier for us to think about kind of what we're getting for most people rather than thinking about the liability being a loan. So we're going to double click on the furniture, and we get this thing that looks kind of like a ledger, and it has an increase and a decrease column. And so then number 2 says double click the furniture. Number 3 says the date's going to be 3/31, and we're going to say that it came from Staples. And we want to make sure we are in the increase column, and we bought something for $5,000, not 500, 5,000. And then in order for us to record it, we have to record some other account. So this, of course, means that one account's going up, which is, of course, the furniture and fixture. The other account you would think would be a credit card or a cash, but in this case, it's going to be loans payable because we basically took out a loan we financed from Staples. So loans payable there, and then we can hit record or just hit enter. We know it's not recorded because I can't see the total here, so I'm just going to hit enter, and then it'll record it here. Now, one other thing to point out, if we did get a loan from Staples and it was a long-term loan, one option that people have is to make multiple loan accounts. So like this loan, it consists of more than one loan. So on the trial balance, we may actually, I would generally list different loans. So if this was made up of 5 loans, I would list 5 loans. And so I would know the loan that I make to Staple versus the loan I make to the bank. And I would actually put the part of the loan number on that. When you create the financial statement, of course, then you would combine all those into just loans payable. You wouldn't list all the loans. But it's helpful on the trial balance for some people to basically, you know, have multiple loan accounts or sub accounts of loans to actually tracking individual loans rather than grouping them into one account. That, of course, again, is the option of whoever is doing the bookkeeping. Okay, so then we record the loan, close the furniture and fixture. So now we can close that up. And of course, what happened here is furniture and fixture went up here. If you double click on it, it's right there. There's that 5,000. And the other side being loans payable here, double clicking on that. There's the 5,000 increasing with a credit in this case because that is a liability account. Okay, going to the next page of 244. It says to prepare a comparative income statement, balance sheet, and transaction report by date report. This is the report that you could export to Excel and basically turn in. So click the report center icon on the icon toolbar, double click the profit and loss standard, change the dates, change the date, select the month from column, modify the report header to remove date prepared, time prepared, and report bases, click print. Okay, so let's do that. So they want to go to the report center, so we could go to reports, go to the report center like so. Select the standard. I like to see it in terms of a list. I'm in the company and financial. They want to select the standard tab, so we're on the standard tab, of course, that's the default, and then click company and financial. Number 2, double click the profit and loss standard. So I'm just going to open it, clicking the run button here, and I'm going to make it large by clicking this button here. There we have it. Can't see anything because the dates are, of course, in the current month, and we are working in past. So we're going to hit tab, I'm going to hit 010113 as indicated by number 3. And then it goes to 033113. That gives us the income for the month. Now we want to hit the drop down here. So we don't want the total. I don't want the revenue for that quarter. What I want is the revenue per month. So we're going to hit the drop down here and select month. Therefore, we have January, February, and March. All right, and then it says modify the report. So I'm going to go ahead and customize it. Under the old software, it actually said modify here. That's why they still use that terminology in the book. And I'm going to go to the header and footer. I'm going to remove date prepared, time prepared, and report basis. Okay, you can also put your name in the footer here if you want. And okay. Now, if we compare this to the book, of course, we can compare net income. So if we compare net income, we've got 28,796, 6,226, and the end result for the quarter, 96,312.43. And notice it's a little off. Remember, we had that dollar off in that one report. So I'm going to say that's okay. And let's go ahead and print this. Now, again, we're going to practice basically exporting this. So I'd like to export this to Excel, and then we can put all the reports in one Excel sheet. That will be the easiest way to upload it. So we're going to practice exporting. So I'm going to hit export here, and we're going to create a new worksheet. I'm going to create a new worksheet. Now, if you don't have Excel, you could save it as a PDF file, and that is perfectly acceptable as well. So I'll show you how to do that as well. So in this case, we're going to create a new worksheet, and it's going to be in a new workbook. So remember, the workbook is like a document, the document file. So like a Word document, we call Excel files workbooks, and then the sheets are going to be the tabs, the sheets, the spreadsheets within the workbook. So we're going to go ahead and export that. It should actually open Excel and create the new workbook and put this information on the sheet at the same time. Okay, so here it is. I'm going to name the tab. I'm going to double click on this tab. Other way you can do it is right click on it and go to rename, and I'm going to name it profit and loss, or I'm just going to say P and L as of 03.31.13. And then click up here, and now I'm going to save this document, and of course I need to put it somewhere where I can then find it and upload it. That's going to be the goal. So we can go to the File tab over here and go to Save As and go ahead and browse. So it's going to search our computer. I put this file on the desktop, I believe, made a file called AC1320, and we are now, I believe we're in week 3, but I'm just going to save it in here. You could put it into a week as well, and I'm going to call it Chapter 8 and save that. So now all of my next files will go into here. Now, in order for the next files to go into here, I have to close this, and then my goal is to try to upload another file that will be on another tab within the same document. Now, if you could not do that, the other way to save it is you go to File and Save as a PDF, and that's another way you can save it. Just make sure you change the name. Of course, the downside of that is that you would need multiple PDF files to upload. You have to upload multiple PDF files. If that option were not there, you could also go to Print, and then you want to print it as some form of PDF file as well. And if you do that, it will then print, and instead of printing, it'll actually try to save it to a PDF file. So it's kind of like printing to a PDF. So it'll have the same drop down, and you'll save it as a PDF file. Okay, so then let's go to the next option. I'm not going to memorize it at this time. So then I'm going to go to number 9. It says click the chart of accounts from the home page, and then click and drag the accumulated depreciation to move it below furniture and fixtures. Okay, so interesting. So click the chart of accounts. So we're going to go back to the chart of accounts, list chart of accounts, and notice that the chart of accounts, because we don't have account numbers, it's in order first by type, and then it's in order in alphabetical order. Now the problem with that is that accumulated depreciation is then the same account type as furniture and fixtures, but it shouldn't be before furniture and fixtures because this account is related to furniture and fixtures. So we're going to try to drag this below this one. So in order to do that, you have to put your cursor on the little star and then drag it below. So we want furniture and fixture and then accumulated depreciation. The reason it went in there reversed is because it's in order by account type, then in order by alphabetical order, which of course the A becomes before the F. Okay, and then number 10 says close the chart of accounts window, return to the report center, and then double click the balance sheet standard view under the balance sheet and net worth section. Now change the as of date to 3/31/13. Modify the report header to remove the date prepared, time prepared, and report basis. Change the from date to display tab 1113 and change the display columns by text box to month. Then click OK. Click the print button. Okay, so let's take a look at this. So now I'm going to close this one. And I'm going to go back to the report center. So we could go to reports, the report center. We're on the standard. We're in the company and financial. And number 10 says close the report and then click the balance sheet standard. So I'm going to scroll down to the balance sheet. So it's under the profit and loss, which is the income statement. Here's the balance sheet standard. You're going to run that. There it is under the balance sheet and net worth. Now change the as of date to 03/31/13. Note that the date, it only has one date in it because this is as of a point in time rather than a range in time. Number 11 then says modify the report header to remove the date prepared, time prepared, and report basis. So we're going to go to customize report, going to go to the header and footer tab. We're going to remove the date prepared, time prepared, and report basis like so. Change the from date in the display tab to 1/1. So I'm going to go back to the display tab. Now here we have two sets of dates because we may want to have comparative balance sheets, or we might want to drill down on the balance sheet, and that'll give us how far back it will drill down on. So if I wanted to see how far back to go to cash, how far back to see the general ledger account, basically, which is going to be a transaction account in QuickBooks, that is going to be determined by the from date. So once again, notice there's only one date here because the balance sheet only needs one date. But if you go into the options, we have the two dates, so we're going to make it 01/01/13, and then we want to display columns by month, meaning we want to see the 3 months broken out. We want to see the as of dates as of the end of each of these 3 months. Okay, so there's the as of January, February, and March. Okay, and then number 12 says click the print button from the toolbar and then click print. So we're not actually going to print it. Whenever it says print, we will then, of course, export it. And so let's do that now. So we can hit the export, and I'm going to create a new worksheet, even though it's in the same workbook. So I'm going to create a new worksheet, even though it's in the same workbook. And then this will pop up, and we want to create a new worksheet, but we want it in an existing workbook. Then we can browse for the workbook. So I'm going to go to the workbook. We're going to go to the desktop, is where I put mine, under AC 1320, and it's under this Chapter 8. And then we can export it. And that should open Excel and have that new workbook tab on it. Once it pulls up, I'm going to then change the name of the tab. So I'm going to double click on the tab and change the name to Balance Sheet 03/31/13. So, oh crap, wrong tab. Balance Sheet 03/31/13. This tab is like directions. Now I have two sheets that are the same. This tab is like directions, so we could just delete this tab. So now we should have two tabs, one being the balance sheet, one being the income statement. If you want to see the header, there is a header on this, but it's in the header section. So if we change the view to like this view, then we could see the header up top, which is here. Okay. Okay, now it turned on the split screen, so that's in the view tab and this split screen, so we can turn that off. And it also has these freeze panes on it sometimes, so that's in the view tab if you're wondering. Okay, then we're going to have to close that before we can download the next one, so I'm going to save the changes on that, of course, and then go back to our book and see what we need next. So I'm going to scroll down. Okay, now we want a transaction detail report. So click print button, modify the report, and hit refresh, prepare blah blah blah. Okay, so now we need a transaction list by date report. So let's report this one. This is the most important report really to turn in, because this is the report where I can see the detail. This is the report where I can really see what went right and what went wrong. So we want to print this one out. So we will go then to QuickBooks, and we'll go to the report center. This one is under accounting and taxes, and we want the transaction detail by date. So it's a ways down here. So here it is down here, transaction detail by date. There's another one that's by account up there, but we want the one by date. So we're going to click on that, and of course the dates will be for the month of March 03/31/13, 03/31/13. There we have it. And once again, we want to export this report to the Excel document. So I'm going to go to Excel. Sorry, the date should be for the month of, so make sure that the beginning date should be 03/01/13, and that will give us the month of. So it should be look somewhat like the book on page 247, and therefore we need the 3/1 to 3/31. It should give us that detail there. So then we can hit the Excel and create a new worksheet, but we want it to be in an existing workbook. Then it should go to where we want it already because we were just in there, but if it does not, we could hit browse, locate the workbook, and save it in that chapter 8. And that should once again open a new workbook, or it should open the same workbook with a new sheet like so. And then I'm going to go down here and name that sheet by double clicking on it and call it transaction list by date, and type in 03.31.13. Alright, and then we can save that report. And then of course this is what we could really compare. If something is off, then we can compare this report to the book. So the book is of course has these numbers here. I'm going to make them a little bit larger, and I could compare this out, and this is of course the main thing we're going to look at. So there's the 4/4, and I would say found it. You know, if something was off, I would actually just go through the whole thing and see where the difference is. Found it. Found it. Found it. Here are the debits. Those are good. And then by doing that, we can basically see that something is weird with this transaction, because this one was 133 and I've got 196. So this is where there could be something off. If we then we can drill down on that. That's that Teague boat that we bought. So we could drill down on that amount if we went back here and we took a look at that account, drilling down on that. Here's the bill that was made for that. I'm going to try to delete that bill, so I'm going to go to Chart of Accounts. I'm going to go to Accounts Payable. And here's that bill right here for that one. I'm going to try to delete that. Okay, and now that is gone. Now I can change the PO. So I'm going to go back up here to the purchase order for Teague, and I'm going to go back to Teague and change this quantity to 1 rather than 2, bringing us to the 133. Then I'm going to hit save and close. Yes. Now I'm going to re-enter that bill. So then we're going to enter bills. I'm going to type it to Teague. Okay, then we can check this one off again. And there we have it. Now it's for the 133. And all I'm going to do is change the date this time, since I don't want to go through this thing again. And the date here was 3/30. So I'm going to put in 03301. Doesn't want to change that. In any case, here's the amount here. So that should basically tie us all out now. And so we can re-export that, and that should basically tie everything out at that point. So just changing this one out, and yeah, of course that was done on purpose in order to demonstrate that checking off of the transaction report. So then once again, if we get these all lined up, then you export this again. I can go ahead and create a new worksheet within the existing workbook, export it, and there we have the transaction list by date adjusted for 03/31/13. And we could save that, and then of course that is what we can then upload.